Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 29th day of October, 2014, and this is the daily report for gold and silver. Following release of the minutes by the FOMC confirming that QE3 is a done deal, it has ended. We have both the precious metals as well as the equities markets trading lower on the day. Substantially lower, of course, is gold trading off about 1.34% or about $16 lower on the day. 1211.66 current print. It has had a low today of 1207.40, a high of 1231.50. Silver also trading lower on the day, but only off about 1%, just hovering above $17 per ounce, 1708. The low 1694, the high 1742. More on silver in a little bit. Interesting day in the markets, of course, with the Fed coming out and stating that QE3 in essence is over. The bond purchasing program is over, or stimulus is over, I should say. Now, in terms of the marketplace itself, we are sidelined. On second thought, would have I liked to have entered the market from the short side? Absolutely. But the key is that as we were sitting here right on this particular crux, this is the 38% retracement level, and it's a retracement level really of this rally right in here. So as the market comes up, it hits this top. 54 is what we predicted as the top. Market comes down, but from at this point, depending on how the news came out, of course, we expected it to either spike up or spike down. If you recall from yesterday's show, what I said is given the technical nature of the market, we could really see it go either way. Given the fundamentals of the market, my bet was to the short side. So I was looking for the market to trade lower. Now, once that has happened, we hit that low of 07. We have a level of support that could come into the market at around 1209 and the 76% retracements at 1198. Those are the two levels we want to look at. What am I looking in terms of where I think this market's going to go? My personal sense with this hard break that we've seen today, unless we have some sort of a fundamental shift in either the economy or something else that gold tends to be a barometer of, then my personal belief is that we will see this market head lower. We will see this market break through 1200, and we'll possibly see it retest 1180. From there, depending on whether it can bounce off 1180 or goes through, we'll have different models that we will absolutely take a look at. So traders, if you recall from about a week, maybe a week and a half ago, what I was looking at on this weekly chart is the fact that I felt that this particular former support line should in fact become resistance. We can see that in essence we came close to it, never came right to it, but we came close to the point in which it was a resistive mark. So now when we look at this market in a more broad term base, we have a series of highs that are cascading lower. We've got a flat bottom, so we've got a descending top and a flat bottom. Now, what interests me about that particular formation is as follows, and that is that when we look at what happened with gold right in this area of hitting these contract highs, record highs, 1900, following that, we really had this flat bottom. Now, this flat bottom, this was about 1534, if I recall, and the fact that I remember that number tells you how many times the market actually went to this particular price point. So on the bottom of this particular series between, call it the end of 2011 all the way up to about mid-2013, we really had the market with a flat bottom and a series of descending tops just like this. And so what happened was we were looking for this particular corrective action to cease at some point. We were also at this point looking at the potential of this market moving back into an impulse phase. And so the belief that I have is that we had somewhat of an A, a B, and then a C retracement. We can also look at this in terms of a compression triangle. We looked at it in both ways, but we most importantly, I believe, had this failed top here. Once we had the failed top and we broke through 1534, it was off to the races because we went from 1534 to 1180, a tremendous drop in the market considering that it had come from 1800. Now, why am I looking at that past historical perspective? Because really what I see is a similarity at this point, except for the fact that we did not get this failed rally to move up, but what we have had are a series of descending tops, and we've also had this flat bottom just as we had before. 1, 2, 3, fourth time it breaks below it. 1, 2, 3. My question is, will we break below it on the fourth time? And so that's a similarity I've been pointing out for over the last month or so, because it's become apparent to me that we could be, in fact, looking at a scenario like that. What's our strategy right now? I'd like to see a little clip up so we can re-enter the market from the short side. But at this point, my sense is that gold is headed lower. So traders, what about silver? You know, I've not been very, very bullish on silver, and I've also believed that it's been fairly stagnant. You can see it through the entire month of October really trading in this area, but we can see this particular support level right in here, and that is roughly right at the area that we're at right now. I believe that that could be anywhere between 17 and 1720. And the key to me is if it breaks through there, the next real level of support on a technical basis doesn't come in till about $16. So I believe a solid break below 17 will signal that we're going to go to $16 in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.